So Patty, today's episode talking about the Canadian payments market.
Really interesting. I mean, I don't think we've really haven't examined this before.
No.
And for me, I found it quite enlightening because I knew that it was a lot different. I didn't realize just how different it was. And I also was interested in Phil. Phil's making the transition to the U.S. and how much he loves this transition. So
Yes,
for our Canadian listeners, and I know we do have some Canadian listeners, you're really going to want to hear what Phil has to say, and our American listeners too.
Yeah, if you're selling cash discounting or you're interested in your portfolio evaluation, those topics also come up in this interview. And then Patty, tell us about the Insider's Report today.
We're just talking about PayPal. PayPal's the ultimate disruptor in the payment space, and they're disrupting their fee schedule. So stick around and listen to that. And then James, you have some really good insights for managers. Would you like to just tell our folks about that?
Yeah, I think as we're coming out of the pandemic, there's a lot of salespeople that are lacking motivation. They are still sitting at home. They don't want to go prospecting. They're looking for that magic formula. So today, really, I just talk to managers and give you some tips about how do we help these individuals set goals, whether they're 1099 or W-2, and we can hold them accountable, get them motivated, and get them back out selling. And so we talk about a lot of ideas with that today.
Chock full episode. So what do you say, James? Shall we go and head on?
Let's go.
Welcome to the Merchant Sales Podcast.
Hey everybody, Patty and I are here today with Phil McHouston. He is the president of Wholesale Payments Direct. How you doing today, Phil?
Doing very well. Nice to meet you both.
Awesome.
Same here.
Well, thanks for jumping on with us. So a topic we've never covered before on the podcast, we're going to talk about the Canadian payment space and kind of comparing that to the U.S. market a little bit. And so, Phil, I think it'd be really helpful for our listeners before we dive into all that you could maybe give a little bit of your story. I know we had an interesting conversation recently. Tell us about how you got into payments there in Canada, and then maybe a little bit of a high level of your rationale and your shift into the U.S. market.
Sure, absolutely. And thanks again for having me on. I got in the business about 15 years ago. Approximately, and I started in the U.S. market. Actually, I started with a company called as an independent agent with United Bank Card.
Oh, sure.
Okay.
Yeah, I think it's now Harbor Touch, if I'm not mistaken.
Yeah, actually, it's now Shift 4.
Shift 4. Yep.
Shift 4. That's right.
That went to another iteration.
Way, and especially that owner. It's a great story behind that.
Yes.
Oh yeah.
Yes.
But I quickly learned that although I understood nothing, that the merchant understood less than me, so it was very complicated to try to figure out, and nobody would tell me, how to sell this stuff. Anyhow, that's a whole other story, but bottom line is, I realized very quickly that I couldn't afford to do this business on my own if I wanted to do it from a management, invest in something from a management standpoint and scale it up.
Right.
So I focused on what I was already good at and already had a business in, which was lead generating, appointment setting, and that type of stuff. And I actually went offshore at the time. So we generated statements and leads for ISOs. And I did that for a few years offshore in the Philippines, built a big operation there. And then when that kind of crashed and burned after everybody kind of got turned off to outsourcing, I got introduced to the Canadian market here for payment processing, and lo and behold, in the Canadian market, there's leasing, so there's some upfront money to make,
right,
offset the cost of acquisition. The profit margins were a little bit larger because it was less competitive.
Right.
So it was, I don't want to say a virgin market, but it was pretty near, and so it was great.
How long ago was that? That would have been what, 10 years ago or so?
That must have been, about 10 years ago.
Okay.
Mm-hmm.
Yeah, about that. And so I basically, did my same tricks of getting the statements in, the same type of a sales spiel, and did that, got the statements in, and made a sale and got paid on the leasing, and Bob's your uncle. I was in business, and then I just came off this big windfall too. So I invested in that and built it up from my basement. So I went from my basement to agent office, to an ISO office and registering with Wells, and then lastly in the Canadian or the U.S. market, I should say.
Well, it looks from here that you're on a high floor. So you went from the basement to the penthouse?
So to speak. No, I'm at my brother's office now.
Okay.
Nice.
I couldn't help it. It was a great segue.
Yeah, I'm in downtown Montreal at our office. Yeah.
Yeah, awesome. So let's talk about the Canadian side for a minute, Phil.
Yeah.
You've experienced now, and we'll get to the U.S. market in a little bit, but you've now been in the U.S. market and had some success there. when you look at the state of the Canadian market today, you know, what do you see as the primary differences and drivers of ISOs and agents selling in the Canadian market versus the U.S. market? What are the big differences our listeners would want to know?
Well, I mean, in terms of, you know, culturally, we're the same. We're pretty near each other, right? So, I mean, we're very much similar, you know, pop culture and all that stuff. So there's a lot of similarities. However, that's kind of where it ends, right? In terms of buying, it's a very different type of approach that needs to be taken. You know, like Canadians, where you know, we always say sorry, right? We always apologize. So sorry, hi, sorry. But the bottom line is that it's being polite so much to the point that we can't be honest. You know, and I'm generalizing, of course, but
sure.
You know, you could have a very long sales cycle to find out that you're not getting the business and just end up with one of those sorry at the end, right?
Sure.
So that's a big difference. Whereas Americans will be a lot more direct, you know, and you have to be very quick too to get their attention and build their interest. You know, you don't have a minute or less to be able to do that. So that's a big difference. And in terms of the merchants here, the prospects, they're a lot more educated on what their options are, right? So they because of the card association rules, and we'll talk, I guess, a little bit about that, but that they're more educated. They know what their options are. They know the pricing options, and they know the rules. So it's a bit different.
Cool.
Yeah. So I would suggest that you know, that buyer beware, so to speak. If you're in the U.S. and you want to come into Canada, be prepared for that. You know, it doesn't mean that it's impossible, because there's a lot of players here that are successful, but you do need to. It's more of a for lack of better words, more of a transparent sales approach, right?
Right.
Sure.
Than what a lot of American companies are used to.
If you don't mind, Phil, I'd love it if you would speak to the role of government up there in Canada. I mean, my understanding is that the government plays a much more active role than they do here. Maybe, and I think there's even like a code of conduct or something like that. Could you speak to that for a minute?
Yeah, absolutely. It's a bit like the I don't want to call it the FTC, but it's a little similar to that, and some of the you know, the rules like the Durbin Amendment and things like that. You know, so they came up with these. It's called the Financial Consumer Agency of Canada, and there is a code of conduct specifically for the card industry, issuers and acquirers, and credit. And basically, the premise behind it is really, it was created to protect the merchant, right? Or the card holder. We'll speak of the acquiring side, but the merchant really to budget, you know, for payment processing. That's the bottom line. And there's a lot of rules that dictate that if there's any type of change in the pricing structure, that they're you know, they have rights, you know, and to do something about it. I mean, that's the premise behind it.
Right. Yeah. It's such an interesting one too, because it, you know, in the U.S. market, there are a lot of, let's say, disreputable players that are doing a lot of crazy things with cancellations and contracts and locking people in and things, especially in the leasing. The one thing I found really super interesting, right, is like the leasing there. I mean, I don't remember the exact details. It's been a while since I was consulting and training up there, but I mean, isn't there some kind of pretty extended period of time where you can even cancel a lease that you get?
Yeah, absolutely. That's what I was going to say. So part of the rules are when you're apping somebody out, or you're submitting an application, a merchant application, right, to get for a signature, whether it's DocuSign or in person, the first page that they're going to see is a cover sheet, and the cover sheet basically outlines and summarizes everything, right? And when I'm talking everything, I'm talking, you know, early termination fees, which needs a nice initial beside it, and also leasing costs, interchange rates on, effective rates on all the different interchange levels, right? So, I mean, fixed fees, you name it, it's all summarized on that cover page, and it all needs to be initialed and, you know, saying that they understand this. And if there's a change in pricing, right, the rules dictate that they have the right to agree to the change or not agree to the change. And if they do not agree to the change, and they give their written notice within 90 days, then they can get out of all contracts, including third parties, at no cost to them, no cancellation fees whatsoever.
Right.
So it's really important now. Does that mean when there's an interchange hike that they're able to get out? No, it doesn't mean that. It means if it's not truly passed on to the merchant directly without a markup, or that savings is not passed on to them, then yeah, they have that right. So it's a big deal.
That's a big difference.
It is. And yeah, I mean, my big takeaway from it, when there's a lot of things about the regulation side of it that I dislike. But the code of conduct, most of that, I was kind of like, that'd be great. Can we just bring that over? So I actually kind of like that. I mean, there's some of the transparency stuff that I think maybe goes a little too far just because it's almost too confusing to the merchant. Like, they're not going to understand a lot of stuff. You have to put all the interchange categories. And to me, there's a lot of that's like a bridge too far. But the idea that like you have this one cover page regulated by law that you have to show people what they're getting.
Yeah.
I kind of like that. I thought that
was cool. And I would think the interchange stuff gets so complex. I mean, it's so complex anyway to understand interchange, to have to set that all out with the effective rates for everything. As James says, that can get really confusing if I were a merchant, I would imagine.
Yeah, it is. And with sleazy type salespeople, I mean, they'll spin it any way that they want, but it's there to add, I guess, another obstacle for those guys, so they don't take advantage of merchants. So you got to appreciate that for sure.
Oh, sure.
I do also agree that it's a little bit too far because, I mean, let's face it, we're in sales, and if we were talking about everything, we would talk ourselves out of a deal. Right. So, I mean, there's a fine line to that.
There's a balance.
Sure.
So let's talk about technology for a minute. So obviously EMV has been around a lot longer in the Canadian market than the US, at least in force. So talk a little bit about the technology solutions. What are merchants looking for in the Canadian market, maybe versus the US market? Are there any differences that you've seen there?
Well, from the merchant's perspective, I mean, it's all the same. Right. And they really, it's all the same. I mean, the consumers here are, want the same things as a consumer in the States. Right. I mean, they want efficiency. They want savings. They want, they want their stuff yesterday, and they want to buy it on an app, on their phone, on, e-commerce. All of that is all the same.
Sure.
The big difference is in the United States, there's so many different solutions, and most of them, or a lot of them, are payment processor agnostic. So, and there's a ton of gateways and all of this stuff, where in Canada there's not. Like, we haven't been actively marketing in Canada for about 3 years now, but it's a common thing for sales offices here that when you find out they have a POS and there's integration involved, you just run, and it could be a perfect opportunity, great conversation, but you can't sell it. Why? Because it's usually the big processors that and acquirers that have the exclusive technology. Right. So it's a bummer. So there's a lot of that. But in terms of what they're looking for, it's the same. The merchants are looking for the same thing. There isn't, however, cash discounting or surcharging. The rules have recently changed not too long ago.
Really?
But there's no. I've seen one person, and it was an app on I believe a Clover unit.
Yes.
If I'm not mistaken.
Right. Yeah, they got a couple of those.
Yeah. So that's the real deal with it here, and you have to walk away from deals, unfortunately, unless you're selling for Global or Moneris, and Moneris doesn't take ISOs here.
Right.
Canada.
Mm-hmm. So let's shift gears a bit, if you don't mind, Phil, and talk about your shift to the U.S. market. I mean, you touched on this a little bit, but what are the major opportunities you see here in the U.S. right now?
Well, the first thing, I love it. I love it. I mean, we were, when I was in the Canadian market, I go to Transact every year, the trade show, I mingle, a network, all of that. And I'm always keeping my ear to the ground and reading trade magazines and all of that. And I couldn't wait to get back into the U.S. market just because of the sheer size of it, and because you see in the marketplace, globally, period, how consumer behavior is changing. So, I was always actively looking for something else. And frankly, here in Canada, it's kind of, like if you're not doing something different, then it's kind of a race to the bottom, right, in terms of your margins.
Mm-hmm.
So what we ended up doing was we ended up working with cash discounting. But I mean, there's a plenty of opportunities that drew us there. First off, like I talked about, the openness of the integrations for POS systems and gateways. We've done some e-commerce. We're doing that more and more lately. So that's a lot of fun. That's a great opportunity, obviously, that we all know about. Canada, globally, it's great. There's B2B, which is another vertical that we're going after, and we're doing very well with in the last year. And last but not least, the surcharging and the cash discounting, depending on what side of the fence you're on.
Right.
Which is a fantastic opportunity.
Yeah, it really is. And let's dig into that one a little bit. I know a lot of our listeners would be very interested to know that, your model here, correct me if I'm wrong, I mean, you're doing cash discounting entirely over the phone, right? With like different layers of callers and stuff. If you don't mind, I know you can't share all your secret sauce with our audience today, but, give us a little bit of an insight. What are some of the challenges you face with that model? And then kind of how is it structured? Is it a 2-tier call center? Like, give us a little context on that.
Yeah, it's definitely tiered. It's a tiered model, and I mean, I think it's a necessity even in traditional processing when selling over the phone, because you have to make a lot of calls.
Right.
So, but bottom line is, it took a lot of trial and error. That's frankly what it was. Sure. A lot of trial and error, and deep pockets to be able to get us to where we're at now.
Yeah.
The big difference is, I mean, with traditional processing, when you're selling over the phone, there's a hard qualifier, right, with the statement. So
sure.
we get the statement, and yes, we do an analysis on it and everything, and we're able to get our profit and savings for the merchant. But that process of getting that statement in is a very hard qualifier.
Yeah.
The merchant shows a higher level of interest, and is open to getting a quote. You don't have that with surcharging or cash discounting, because you can't really fit it into the pitch, not that I'm aware of.
Sure.
And everybody's interested in saving 100% of their fees, or near virtually all of their fees, right? So, I mean, where is the qualifier, and where does, the buck stop, where you have to kind of fire your prospect, right? So, really what it boils down to is exactly that. I mean, that's the biggest thing that we learned, and it took us a while to learn that, is that even though a prospect likes the idea of it, it doesn't mean that they're going to switch and that they're ready, to pass that fee on, right? And it's great that it makes us money, and it's great it saves them a ton of money, but it still doesn't make it so, right? They're not ready to do it. So you have to be able to, it takes a good salesperson, right? One that has very good qualifying skills and listening skills, and be able to fire your prospect. That's really what it takes, and then when you have somebody that's truly desires selling this or purchasing this, right, and they're on the fence, then the second part of it, which was also, a big part of it for us, was, the trust and reputation, like, they need to be able to trust you. Who's Wholesale Payments Direct, and why should I give you your business, and why should I believe what you're saying to us?
Right.
So that was a big part for us as well, and we worked hard on building our reputation, and that was a real deal changer for us.
Well, I think this is such an interesting conversation, because as we talk about cash discounting, I'm always reminding people that there's this misperception in our industry right now that cash discounting has taken off primarily due to merchant demand. And that's really not true. I mean, merchants do like it once you convince them. The real reason it's taken off is because it solved so many problems for sales organizations. In your case, on the phone, the hardest thing about selling over the phone in the U.S. market, at least in my opinion, was always grabbing the attention. You touched on it earlier. How do you get somebody to stay on the phone with you for that first 30 seconds or a minute without hanging up?
Right.
And cash discounting does that. Now, does that mean, to your point, does that mean it's easy to close the sale? No, it's still just as hard as it ever was, in my opinion, maybe even a little harder. But the way the numbers game plays out is, of course, it's a lot more profitable when you do get a deal. But also on the front end, just looking at the raw numbers, it's like you're getting so many more people interested initially that even though the rest of it, the numbers are still playing out about the same, if not maybe even a little worse as far as actually getting them across the finish line, but you are getting a lot more people interested and kind of like more in the top of the funnel, which makes it, really, really exciting. So I love it. I think I think there's a lot of opportunity there. I think surcharging has a lot of opportunity. One of the other things that, we keep kind of shifting gears here, but one of the topics that I thought was interesting from your experience, Phil, is portfolio valuations, because right now with surcharging, with cash discounting, there is a lot of uncertainty and, B2B and everything else. Talk a little about your experience in portfolio valuations. A lot of our listeners, that's really all they're trying to do. If you really drill down, they just want to build a profitable portfolio. So talk about portfolio valuations and some of your experience in that area.
Yeah. So, that's always been part of our business, because I'm self-financed. I've always done this on my own and no outside financing. Right. So, throughout the years, or the decades, I should say now, I learned how to negotiate my portfolio and use that to leverage, to grow my business. Right. And in that process, built up a very large or a strong buyers network. Right. And that was one of my concerns as well going into the States was, with this particular product, which is our primary product, the cash discount surcharging. And, how will our network, how are they going to react to this, and what is the value going to be? And, listening to some of your podcasts and reading some industry magazines on articles on that, I was unsure myself. Right. Yeah. What I've learned was, at least with our network, right, that there is no difference, they have the same valuations, and maybe even more, frankly, because they're really juicy files, right? Let's face it. Yeah. So, and in my opinion, and according to our buyers, cash discounting and surcharging is here to stay. Right. It's not a flash in the pan that's going in. Right. They're comfortable investing in these in this vertical. And now, with that said, what's important though too is, like with traditional, if your attrition is terrible, right, and you lose a ton of clients, in a 3-month mark or 2-month mark or 6 months or whatever, same is true with this, and in fact, I think it says more. I mean, it's more of solid investment, frankly, because with surcharging, I mean, the only way you can mess this up, I mean, they're not going to switch if they switch with you. They're not going to leave again to a competition. Even if they can save a half a basis point for their customer, they're just not going to do it. Like the only reason they would do it is because of customer service, customer service or technology problems or something like that. So it's a solid investment. Our network, loves it. We've had no problem to fund our growth, and we've needed to, like any other small to medium sized business to continue to grow. But my point is the customer service needs to be strong, and as well in the sales cycle, right, is to control the customer, the merchant's expectations, right? I mean, if you're selling this and saying you're going to, try it out for 2 weeks, I mean, you're giving them an out. It's going to be a weak sale that's going to end up being problematic, right? But if you control the expectation and say, listen, your customers are going to be unhappy, right? Nobody likes to pay more, but if you stick with it, for 2-3 months, you'll see that the dust will settle and you'll be okay. And out these fees. And if you do that, you're going to have a solid portfolio that is going to be very appealing for an investor.
Love it. Love it. Well, I'll tell you what, let's do. I still have one more question for you, actually, Phil, but before we get to that, could you share with our network? I know a lot of individuals listening, they're looking for, how do I get that portfolio valuation? How do I find a qualified buyer? Where would you send them to actually learn more about that opportunity to get a valuation of their portfolio and get it sold?
Yeah. So you could go to myportfoliovalue.com. It's myportfoliovalue.com. You can fill out a form. You could also email me if you'd like, phil@wholesalepayments.direct.com. We'd be glad to give you more information and guide you in the right direction if you need help with that.
Awesome. And that email, one more time, you said it was phil@wholesalepayments.direct.com?
That's right. It's phil@wholesalepayments.direct.com.
Awesome. So last question, and then we'll let you go today, Phil. I'm sure there's going to be ISOs that are listening that are in the Canadian market. We do get some listeners in Canada, about 5% or so. And, they may listen to this and say, wait a second, Phil left Canada or, didn't leave, but, selling in the U.S. market. Maybe we want to do the same thing. Any parting words of wisdom that you'd have for your fellow ISOs there in Canada that are thinking about going from the Canadian? We talked about going from the U.S. to the Canadian side. What about going from the Canadian to the U.S. side? Any words of wisdom there?
Yeah. So like anything, you could do it if you put your mind to it, right?
Sure.
Personally, myself, what I did is I sold my customer base here in Canada completely. So I kind of burnt my own bridge, if you will. There was a point of no return. So that way I had to make it work.
Yeah.
The margins are very, very big in cash discounting, right? They're big. That's no secret. However, it's not a get rich quick scenario. It's not an easy sale to find, or it's an easy sale, but it's hard to find the right buyer.
Yeah, I like that. That's a great explanation. Actually, that's really good.
And it takes, obviously thinking out of the box. It takes persistence, hard work, obviously, and deep pockets, as I said, for us. Having to be able to sell our book there has helped us a lot.
Yeah, I think definitely going the phone sales approach. I've got about 4 consulting clients right now that are doing similar concept where you have the multiple tiered call center, getting leads and closing them, and it's like one of those things where it's one of the most profitable things that you can have, but it's one of the most expensive things that you can build as far as a business model, in my opinion, because you really there's no way to do it without just paying a lot of people for a lot of time.
Right.
To work the kinks out and figure a process out. And of course, training people to be able to do it is not quite as easy as it might seem at first, especially you can get the leads, but the leads are the easy part with this. Training the salespeople is really quite challenging, I would say.
Yeah. And we do all of that in-house. So, we don't outsource anything. So, from calling the raw data to, closing the sale to trainers, everything is all done in-house. So they're all with wholesale payments.
Yeah. Yeah.
So in other words, it's a big upfront investment, but the payoff can be handsome if it's properly
exactly. It's a long-term project, and it definitely and that's why I say, for a guy like me, and I'm sure there's lots of agents and smaller ISOs like myself that don't have outside financiers or anybody investing in their business. This is a way to fund your business. And and I've started right from 10 years ago selling for very small multiples all the way up, and I've learned the hard way, and built a strong network. So that's the best way to do it in my opinion, for me.
Yeah, and I think one last thing I just want to touch on is something you brought up. Last week on the podcast, I think I was talking about use of capital in our industry, and I think what you're saying hits home on something that I believed in for a long time that I don't think we've talked about enough. And that is, there's a lot of people in our industry that are just like, why would you ever sell a residual portfolio? Like, you just never sell that. It's such a good thing to have. And, ultimately there's a lot of situations like what you're describing where I don't look at it as selling it as much as I do flipping it. It's like, I'm going to sell this portfolio so I can buy this other one, through having people in telemarketers, whatever. I've done that myself many, many times where probably now at least 6 or 7 times over the years where I've sold one book of business because I realized that's not really the future. It's a bunch of, back in the day, it was like I had all these merchants doing, under 20,000 in volume with a Hypercom T7 terminal, and it's like, what, if I sold all those and I got, $200,000, I could actually hire a few salespeople and we could go start selling point of sale systems before that was the norm, and then those accounts would be so much more valuable. And so I did that, and then it's like, well, I could actually sell those and then I could actually build a team of people and start selling omni-channel, so I think you make a good point of, the idea of selling the portfolio. It's not always about you're selling the portfolio to go buy a new Ferrari. Sometimes it's about selling it to reinvest in the business, right, Phil?
Yeah, it's not so much an exit strategy, right? As an investment tool. It's exactly right. It's I'm talking about funding our growth. So that way let's face it, we're not selling the shareholder equity in the business.
Right.
We're selling some of the financial equity.
Right.
Selling
the asset.
The asset, exactly, for the upfront benefit.
Yeah.
Right. the question is, and I think in the old days they say that don't sell, your residual. That's what you're working for, and I agree with that to a certain point. I think that depends on what the deal is, right? So I mean, if you're getting a small multiple, then that's it's not going to take you very far, right? But if you can get a good deal for yourself and have somebody that has your back in order to get that good deal for you, and you use it, to fund your growth and reinvest, like you said, the capital, like your last podcast, I think that's been our success.
Awesome. Well, Phil, I'm sure we could talk for a lot longer about this, but it's really been great having you on the podcast. I appreciate you sharing your insights on the Canadian market and as well cash discounting in the U.S. side and coming over. So thanks so much for jumping on and joining us today.
Yeah, really informative, Phil. Thank you so much.
It's my pleasure, and thank you very much for asking me. And that's great. And I hope we speak again sometime in the future.
I'm sure we will.
So, Patty, one of the great things about our sponsor, Valor Paytech, is this omni-channel approach. There are so many merchants. I was just talking to one of the top executives at Valor Paytech actually yesterday, and we were talking about how he had an experience where he was talking with a construction contractor. And this construction contractor, the way that he was doing business is he was, getting a call. He would set up a, very expensive project. They would go and complete this project. It's usually a one-day project. They'd complete the project. Then afterwards, his team would reach out and try to get payment over the phone. And, this executive at Valor Paytech was saying, use Valor Paytech, because the e-invoicing, all of that, which is so simple and seamless with that system that it's like, hey, you can have a terminal and you can have e-invoicing and it's all going to be under one MID. It's going to work seamlessly. You're going to have one dashboard to see all your payments. You'll know which invoices have been paid, which ones haven't been paid. So I think some of that simple stuff gets lost on salespeople in the industry a lot of times of, go after an industry and, a lot of times we're so hung up with, which POS solution and all the complicated things. And really, you just need to talk to people. How are they processing payments? Where are the pain points at? I had a very similar experience. I'm working right now, actually, with the company that installed an air conditioner for me. They have yet to receive payment from me because they want to set it up to do credit card payments. And I said, I'll help you set that up. I'm probably going to end up paying with a check because it's taking a little while to get going. But they were doing the same thing and they were charging a 5% fee to take cards. And I was like, hey, we can do cash discount. We can set it up a little bit less than that, be more realistic for your customers, et cetera. So there's a lot of opportunity out there still in the payment space. I'm amazed as a consumer, especially with vendors. I'm amazed that there's such a big opportunity in payments still with these companies that just are not doing it the right way. So,
well, it blows my mind because I've had several occasions, plumbers, and builders and electricians.
Yeah.
And, and I'm always telling them like, you can do this much more efficiently than what you're doing. I mean, I had an auto mechanic the other day and it was like, how do I pay you? Right.
Yeah.
Oh, can you give me a check, please? And I watched my bank account. It took 5 days for that check to clear.
And then he had to drive to the bank and all the opportunity costs he lost. Of
all that stuff,
and everything like that. So,
and there's a lot of things out there. And I think if you just talk to these guys, and it also strikes me, doesn't it? I think you would agree, James, and what Valor can help with is you don't have to do any kind of fancy footwork.
Right.
It doesn't matter what the industry is. This solution is going to work.
Right.
And if you want to do cash discounting, it's a no-brainer. Yeah,
on the e-commerce side and on the physical location. So
both ways, yeah.
Definitely head over to ccsalespro.com/Valor, VALOR, and show our sponsor some love. So it's again ccsalespro.com/VALOR.
And now, here is questions from the field with James Shepard.
So, Patty, I have not done a questions from the field for sales managers lately, and I haven't really talked about how do we get these people fired up to get out there and sell payment processing because let's face it, selling payment processing is very difficult. It is something that even with the advent of cash discounting and surcharging, et cetera, there's a lot of negativity that you face in sales in general.
Right.
And so today I just thought I would share a couple of tips. This comes from several conversations I've had consulting lately, talking to sales managers about, motivating salespeople. One of the big challenges right now, salespeople are, this is a post-pandemic world. We're getting there, right?
Right.
And there's a lot of salespeople that don't want to go out and prospect anymore.
Mm-hmm.
They don't want to pick up the phone and make those cold calls and set up those appointments, And so I think a couple things are really important. I think number one, trying to help salespeople to understand how to accomplish their goals, how to realistically accomplish their goals. Salespeople, a good salesperson is always going to set an unrealistic goal for themselves.
Of course.
That's what good salespeople do.
That's what you do. Right.
Christina would tell you that, when I come to her and say, hey, I'm going to sell this much revenue at the company, she'll think, okay, well, let's see if you can sell half of that,
right.
She's always challenging my assumptions, and you need that. And as a sales manager, you need to play that role of, okay, it's great that you have these lofty ambitions, but how are you going to accomplish them exactly?
What are your steps?
Yes. And challenging the assumptions and the beliefs of the salespeople to say, well, it's great that you have this creative idea that you've never tried before,
mm-hmm.
but you can't depend on creative ideas you've never tried before to get your results.
Right.
And I think a lot of salespeople, they're always trying to chase that next creative, magical thought process that's going to get them out of prospecting.
Mm-hmm.
And I don't really have a problem with that as long as you're spending that 3 or 4 hours a day doing the prospecting now.
Right.
And then once you do figure out what that magical formula is, I can save you some time.
Transition.
You're never going to find it, so I can save you some time, but that's okay. You want to keep trying. Go ahead. It turns out it does take a lot of hard work to make a lot of money, but that's okay. So, if you want to keep searching for that, go ahead, but you got to have the underlying foundation and results. So I think as sales managers, it's that having those conversations and that communication, really audit yourself and ask, have I been, when I think through my salespeople, and again, 1099 contractors doesn't matter. W-2, right. 1099 doesn't matter. I always hear managers complaining about their 1099s and how they have no commitment and they don't, get anything done. And I'll say,
right.
Okay, well, give me an example of somebody that you think has a lot more potential than they're achieving. And they'll say, oh, Susan. Okay. When is the last time that you and Susan had a one-on-one conversation?
Never.
That you proactively initiated. Not she called,
right.
She was upset about her commission check, but you reached out and said, what are your goals for the year? What are your ambitions? How can I help? Right. And so I think sales managers need to manage, they need to get involved. And then what you do is you find out what these goals are that people have. Then you break those down and say, okay, so you want to sell 15 merchants a month, 20 merchants a month. That's fantastic. Let's look back at the last 30, 60, 90 days. What's your closing percentage? How many merchants have you spoken to and how many did you sell? Okay, well, you're currently closing at 10%. So that means that if you want to sell 20 merchants, you need to talk to 200
merchants
this month. And if you want to talk to 200 merchants, how many days are you going to work this month?
Right.
Probably 20. If you're in this industry, probably 15 because you take like a week of vacation every month, So how many days are you going to work? We're going to work 20. Okay, that means you got to be talking to 10 new business owners every day.
Right.
And so breaking it down like that, and then maybe they say, well, then what you got to do the next step is check back in with people, right?
Well, that was what I was just going to say, because you can't just do that in January and then come back in November. You need to come back in February and say, hey, how did you do with that? Looks to me like you only got 8.
Right. One of my favorite questions to ask salespeople is, you have a conversation like that, and let's say that hypothetical one I just did. After 3 days, 2-3 days, I'll say, so how many merchants have you talked to so far in the last 3 days? And they'll say, I talked to 15. I'll say, okay, so are you planning to close twice as high as what we had anticipated? Or are you planning to cut your goal in half?
Right.
And they're like, well, I don't want to do either. Well, you're going to do one or the other because these numbers don't work. And so salespeople, a lot of times, salespeople love magical thinking, and that's part of their allure. That's part of their strength. Is that positivity, but they need somebody to help them understand magical thinking is not going to help you. You're not going to hit your goal. That's going to keep you positive, which is good. But at some point, your actions are going to produce your results, and just reminding them of that. And I think having that conversation on a regular basis, and really just having a conversation in general, how many of your salespeople have you talked to say, hey, how have you made it through the pandemic?
Right.
Protection program funding, how's everything going with your family? And so I can tell you that, the salespeople I'm involved with in the industry that are doing really well and have done well through all of this, they're texting, they're calling, they're emailing their salespeople individually. And they're having these conversations, and they're just having real conversations, helping them set goals, helping them convert those goals into actions. And then, whether they're holding them accountable or not, however you want to look at it, they're having follow-up conversations to help them assess where they're at and help them to adjust their goals or their activities accordingly.
Yeah, really important.
This is the Insider's Report with Patty Murphy, brought to you by The Green Sheet.
Well, James and folks out in listening land, PayPal just announced a new set of fees that will make it generally more expensive for online merchants to accept PayPal payments.
Yes, and
in some cases,
a lot of excitement from merchants.
yeah. In some cases, the increases are going to exceed 40%.
Yeah.
To me, this move is especially noteworthy, given the fact that Visa and MasterCard were pretty much bullied into backing down on their price hikes earlier this year.
Where's Dick Durbin when you need him?
When you need him, right? I mean, right now, online sellers are paying 2.9% plus 30 cents to accept PayPal digital products. That's PayPal checkout, pay with Venmo, checkout with crypto. Beginning August 2nd, the fee is going up to 3.49% plus 49 cents.
I mean, it's just insane. It really is.
Isn't that insane? I mean, that's a 78-cent increase, or 24.3. I did the calculations. 24.3% increase on a $100 ticket.
Wow, that is just crazy.
And the fee for a $10 online purchase is going to jump from 59 cents to 84 cents, which is a whopping 42% hike.
Wow. That is crazy. Yeah, I read a little article about it, but I didn't see the actual numbers. That's crazy.
Yeah, it's funny how somebody called me when I was trying to crunch the numbers earlier today. I'm like, no, I'm crunching numbers. This is like it was so out of norm that I kept saying, no, I couldn't have this right. I got to do this again. Right. And it was like 42.
So just to clarify. So you're saying these fees that you're talking about are associated with merchants who want to accept any payment using PayPal, or merchants who want to accept a PayPal payment?
Merchants who want to accept a PayPal payment. They're actually...
This is kind of like the PayPal interchange in a way.
Right, PayPal interchange. Now, if they're accepting Visa, MasterCard, Discover, any of the branded cards through PayPal, right, it's actually going to go a little bit lower.
Okay.
Okay, online sellers processing these through types of payments through PayPal can opt. What is it? It's 2.59% plus 49 cents.
Oh man, that's down.
Yeah, well, it was 2.9 plus 30.
Yeah, so depending on your average ticket size.
Depending on your average, and I did a bunch of there was a couple where it inched up a few and a couple where it went down a bit, but it's mostly down a little bit.
Wow.
And they can also opt for chargeback protection for a higher fee, of course. And that fee, so if you want chargeback protection while accepting a Visa, et cetera, it's 2.99 plus 49 cents. So that actually goes up a little bit because it was 2.9 plus 30. Now it's 2.99 plus 49.
Patty, I've kind of lost track of PayPal a little bit. So PayPal is still the parent publicly traded company, or are they owned by somebody? Do you know?
No, they were owned by eBay for a long time.
Yeah, okay.
And then eBay sold them about 4 or 5 years ago.
Okay, so now PayPal is just PayPal. Publicly traded?
Publicly traded. And I will tell you, I follow their stock because I like to follow all kinds of payment stock.
Yeah, sure.
They have gone up, from... When I first started following them, they were trading at about $40 a share. Yeah. Now they're at $250 a share.
Wow.
Yeah. So like if you bought 100 shares at 40, you're looking at about a 1,000% increase in your investment, something around there. I was doing that numbers earlier today, but I think it came out to close to 1,000% hike.
Yeah.
And here's the other interesting thing is, it used to be with PayPal that whether you were using a PayPal payment function, feature, or a credit card, it was all the same.
Right. Right.
So now they're stripping that out.
Yeah. Now because they've now got, I think it's, you watch these big companies, and in some ways it's sad a little bit to me to see them where you can tell that they reach that point where it's not about growth anymore in terms of acceptance. I mean, of course they have those functions and they have, those departments, but it's like, okay, we got to increase our profit. We're just going to have to get more money from the people we already have.
Right.
And I think that's unfortunate. It's the reality of the marketplace and capitalism, but that just goes to show that PayPal has kind of become the dinosaur, and
Well, yeah, and especially because it became early on, everybody knew they were losing money hand over fist.
Right.
Because everything they were doing things so cheaply. Like take an example. Here's a good example. They introduced touchless QR payments last year. And it was for the first 6 months, no fee.
Right.
Okay. Right. So now if it's 1.9% plus 10 for transactions over $10, or 2.40% plus 5 for anything under $10.
Well, that's a really stupid pricing thing. Why would they do that? Why would you lower your per item when you
lower the price? Yeah, I don't get that.
But anyway.
And here's the other interesting thing. They claim that they have more than 1 million merchants have signed on for QR code payments since they first introduced it last April.
Interesting. I mean, I could actually see the QR payments would be a much more likely way for people to use PayPal at a merchant location.
Right. That's what I see it as.
If I want to use my PayPal, I don't even know how I would do that.
I don't know how I would do it other than unless they had a QR code, right?
QR code, that makes sense. But
right.
But that's interesting. Yeah. Well, I'm sure we'll hear more about this, but it's and
you also have to look at it. They're hiking these prices for online at a time when online business is booming.
Right.
Right. I mean, the company reports that it processed $285 billion in payments during Q1, which is a 49% increase over Q1 2020.
Wow, that's huge.
That is huge.
Yeah.
And they had, as of Q1, they had said they had 392 million active accounts.
I think one thing PayPal does have that's a big asset to them is that I think online consumers, PayPal got that early mover advantage where you pay with PayPal. I think generally people feel safer.
Mm-hmm. I have to admit I do when I pay with PayPal. It's sort of like, okay, at least I'm not putting my credit card in there.
Right, exactly. Yeah, so I think they've positioned themselves well. I think it's like Plaid is kind of in the early stages of that with bank information. But I think it's interesting being that trusted middle party, and ultimately, how do you make a lot of money at that? Well, you have to charge more for being in the middle, and that's what they're doing. So I guess it shouldn't be a shock to anybody, but it is a little surprising that they waited so long and then increased it so much. It seems like, why don't they go back 24 months and slowly get to where
slowly increase it, right?
Yeah.
Yeah. I just wanted to share a quote with everybody from what's his name? Dan Lieberman, who's SVP at PayPal, and he did a blog post explaining the increases. And I love this quote. PayPal has become more than just a button or payment processor to become a full commerce platform capable of driving growth for businesses of all sizes, online or in person. And he noted that, for example, merchants offering PayPal's buy now, pay later option have seen a 15% lift in growth, and that PayPal's data shows that consumers are 3 times more likely to complete a purchase if PayPal is a checkout option.
Wow.
Yeah. I just thought that was, really interesting. Yeah. But most of all, I think what's interesting is, here they are jacking up prices when Visa and MasterCard were bullied into holding off until next year any new price increases.
Yeah, it just makes you wonder, how long is it going to be before, Congress sets its sights on processors and says, well, why are we spending so much time, bullying Visa and MasterCard and the big banks when that doesn't really matter if the processors are going to increase rates to the merchants. That's ultimately going to be the determining factor. So it's interesting. Definitely. I think it'll be interesting to see how it plays out and see, every time something like this happens, whether it's Square, PayPal, or, it's funny we're talking about them as if they're so evil when obviously Fiserv and everybody else in our side of the pool is
Right.
doing massive regular price increases as well. So
sure,
it's the nature of the beast, but I think it will be interesting to see how long that behavior lasts before it does get the attention of Congress and they decide to take some type of action. So that
right.
would not be good. Good stuff, Patty.
Yeah, thanks, James.
This episode of the Merchant Sales Podcast was brought to you by Valor Paytech, the technology company that is revolutionizing cash discounting and surcharging with innovative features like dual mid support, waive the fee options, and even adding non-cash adjustment charges to tips. Now, all of this is made possible by a variety of technology devices and solutions such as gateways, tabletop point of sale devices, and features like SMS text messaging and e-invoicing, all with cash discounting in mind. Valor Paytech, bold ideas, smart execution. Make sure you head over to ccsalespro.com/Valor, VALOR, ccsalespro.com/Valor, VALOR. Schedule your free demo today and watch videos and learn more about this amazing technology solution.
Thank you for listening to the Merchant Sales Podcast. Whether you are an industry veteran, processing executive, or just trying to learn about the payment space, we appreciate your time. The Merchant Sales Podcast is a joint production of greensheet.com and ccsalespro.com, and we hope you will tune in next week for more information and tips on building your merchant services business.